Hey everyone, welcome back to Corporate Decoder, the place where we decode SEC filings and find the real story behind the numbers. So, Public Storage is back with an 8K, but this isn't just another update. It is about them raising a seriously big chunk of cash. We're talking about a new deal worth hundreds of millions of euros. Before we dive in, if you are all about getting the inside scoop on company financials and strategies without the corporate jargon, do me a favor and hit that subscribe button. Also, we've got a fantastic community over on Discord where we break down these filings even further, so check out the link in the description below. Alright, let's get straight to it. Public Storage, or PSA as it is usually known, dropped this report on the 26th of September 2025. The main event here is a big new deal to sell senior notes. Think of these like IUS, but for companies, and these are worth a lot of money, specifically 425 million euros. This section, entry into a material definitive agreement, tells us Public Storage, along with its subsidiary Public Storage Operating Company, or PSOC, has signed an underwriting agreement. This is basically a contract with investment banks like BNP, Paribas, Goldman Sachs, Co. LLC, and Morgan Stanley Fintech Co. International PLC. These banks are going to help them sell these new notes to investors. So what exactly are they selling? It is 425 million euros worth of senior notes that are due in 2034. SOC will actually be issuing these notes, but the parent company Public Storage is providing a guarantee. That means if SOC can T-pay, Public Storage steps in. It is a pretty common setup to make these debt offerings more appealing to investors. Now, let's talk about the cost. These notes will pay interest at a rate of 3.500% per year. They being issued at a slight discount, about 99.447% of their face value, meaning investors are getting a little bit of an upfront gain. The big date to remember here is that these notes will mature, meaning they have to be fully paid back in January 2034. Why are they doing this? Well, Soupy plans to use the money to pay off some older, more expensive debt. Specifically, they're going to use it to repay about 242 million euros of their 2.175% senior notes that are due in November of this year. 2025, that is a smart move, refinancing higher interest debt with cheaper borrowing costs. The rest of the money is going towards general corporate purposes. And what are those general purposes? The filing mentions investments in self-storage facilities. This could mean buying more properties, developing new ones, or even offering loans secured by self-storage facilities. They also mention other debt repayments and redeeming outstanding securities. So it sounds like they're using this capital to strengthen their balance sheet and continue growing their business. It is interesting to see the investment banks involved here. BNP, Paribas, Goldman Sachs, and Morgan Stanley are not just selling these notes. They also have existing relationships with Public Storage. For example, they are lenders under PSOC's revolving credit facility. This is pretty common in the financing world. Banks that lend money often help companies raise more money through debt or equity offerings. It shows a strong, ongoing partnership. This whole deal is built on a foundation of trust and legal promises. The underwriting agreement includes customary representations, warranties, and covenants. Essentially, Public Storage and PSOC are making sure they've told the underwriters everything they need to know and are promising to uphold their end of the bargain. They're also agreeing to protect the underwriters from certain liabilities, especially those related to securities laws. This is standard practice to ensure transparency and protect all parties involved in the offering. Now, the filing itself is an 8K, which is a report of what we call material events, basically significant things that happen to a company. This specific filing includes the underwriting agreement as an exhibit, which is Exhibit 1.1. They also included legal opinions and consents from their lawyers, Hogan Lovells Us LLP, as Exhibits 5.1 and 23.1. Finally, there is the interactive data file Exhibit 104 for the SEC CS systems. Looking at Public Storage more broadly, this move to raise 425 million euros suggests a company that is not only stable, but also looking to expand and optimize its financial structure. They are clearly comfortable using debt to fund growth and manage their liabilities, paying off older, more expensive debt with this new, presumably cheaper debt. The fact that they are investing these proceeds back into their core self. Storage business indicates confidence in that sector's future. Public Storage has a strong track record and is one of the largest self-storage companies in the United States. However, there are always risks. Relying heavily on debt can increase financial risk. If interest rates were to rise significantly, or if their operating performance were to falter. The self-storage market, while generally resilient, can be sensitive to economic downturns. But for now, this deal appears to be a strategic move to lower their borrowing costs and fuel continued expansion. They seem to be making smart financial decisions to support their long-term growth strategy. Alright, that is our breakdown of Public Storage S latest 8K filing. What do you think about this big debt issuance and their plans for the funds? Let me know your thoughts in the comments below. If you found this video helpful, please give it a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community for even more insights. Thanks for watching, and I'll see you in the next one.